Good weekend, all. Ira Epstein, and here we are with your weekend edition of your financial market wrap-up. And we're going to be looking at the weekly charts for this July 8th, 2023. Now, first announcement. I will not be here for the Monday morning for certain update for you, giving you the morning flash, and I may not be here for the evening. I have a family member. I have to go out of town, and I want to be with the family. We have family members coming in from everywhere for a major surgery from one of our members. And I'll be at a hospital in Indiana. It's a hop, skip, and a jump back if everything goes well for the evening updates. If not, you'll probably see me on Tuesday. If things go terrible, whole different game. I don't know where I'll be on that. But got my fingers crossed. Okay. So we had the jobs data come out on Friday, and the way I look at it, 209,000 is still a strong number, but it's in the right direction. They revised the May number to 306,000. Now you get 209,000. What went on with ADP for 497,000 is 209. I can't even begin to tell you, and I'm not going to try to guess. It just doesn't make sense. But as this is falling, which is good news, unfortunately, we're still seeing increases, minor as they are, increases in wages. That is not what the Fed wants to see. So I think this was the nail in the coffin, frankly, that the market is going to see the Fed move for 25 basis points, and then they get a free pass because there's no meeting in August. There's another meeting in September. At the September meeting, they'll have the benefit of seeing how the month of July did, creating jobs and the like, August, creating jobs and the like, and they can make that decision. So I'm looking for a 25 basis point hike basis this. We get CPI coming out shortly. The headline number is expected to fall to 3%, and the core down 2 to 3/10 towards the 5% level. That's still a very big number, and the Fed will probably try to keep going with interest rates because of that. So that's where I'm at. Does the market know it? Well, as much as the market was down on Friday, yeah, it knows it. I didn't say the seasonals are impacted by this. Now that you got this out of the way, we have to see where the market goes. In the gold market, it went up $17 as the dollar fell hard, 91 points. Because what I think the dollar realizes is the Fed is coming to the end. You're starting to get the other numbers fall in the line. That goes down, but you still have the Europeans in terms of the UK, European Central Bank and other central bankers. They're probably still going to move higher on interest rates to fight their inflation. We had good movement in the energies, and over on Friday, what the Biden administration announced, they did buy that 3 million barrels. They paid too much. They paid 71.90 cents or something. They could have bought it near 68 blindfolded, so $3 too much. But they announced they're going to buy another 6 million barrels now, and then they'll finish off the year by having 12 million bought. I was thinking about that and did the math. If they buy only 3 million each quarter, even if Biden were to win another term, he couldn't fill it up if he stays at 3 million. He took 180 million out of the strategic reserve. If you're only going to do 12 million a year and he even gets another term and you got one more year till the elections, where are you? You're going to be what, 70, 80 million barrels? That's not enough. You got to do more than that. And what will prices do then? Don't know. But OPEC ended. They said that they're going to take 1.5 million barrels off the market as we get to the end of July into August. That is the combination of the Saudis saying another 1 million barrels a day and the Russians, who don't tell the truth, saying that they're going to hit 500,000 barrel a day decline. I think that the Russians, if they don't do it, there will be problems within OPEC, because how much do you want the Saudis to keep cutting? And at the expense of they're just basically giving those cuts and letting Russia produce what they were? Nah, that doesn't make sense to me in any manner. So I think we'll see something. The good news also is the U.S. is producing more. We'll probably hit some records here. Why? Technology, doing much better in our production. So if we look at the S&P for the week, you were down 1.25%. When you take, by the way, for the month so far, I said that wrong. For the month so far, this is only the 8th. We got a ways to go. For the week, you were down 1.25 also, because the beginning of the month and the week fell at the same time. So here's where you're at now. Market still looks overall bullish. You can see the pattern is still up. You've gone into a bit of a pause. You have the pattern of higher lows, higher highs, still bullish. Next, what we have, you're liable to get a bullish crossover now when we reopen. 4203.50 is just 0.6 underneath the 100-week average. If it gets over it, it's a bullish event. You have the 200-week, then you'll have the 100 and over at the 18-week. Normally, when that occurs, I tell traders look for a new high on the move. So if that occurs, that's what I'll be looking for. But remember, this isn't a daily chart, it's a weekly, so you've got time with it. When we look at Bollinger Bands, you had been riding them and you've backed away a little bit from them, but you have the embedded reading. So until the red line closes underneath 79, pullbacks in the market, I think, are going to be bought by the pros. They'll bail if you get a reading, in my opinion, under 79. Now, at the end of this, I have my Bollinger Band course. And take a look at that, because the probabilities when these events happen are high, high, high. But you've got to do the slow stochastics with me the way I do them, not the way you're doing them. Your method of doing them differs from mine. I changed the formula. I learned the formula, obviously, many, many years ago, and I learned it from George Lane, who developed it. And then I went to George, talked to him about what I was doing, said, George, I think I have another mousetrap I want you to look at. And if you knew George, character, would wear a lot of silver jewelry, like he was from the Southwest, New Mexico. And he said, I think you got something. And we worked with it. And obviously, I tie it together with Bollinger Bands, which I think is one of the best tools out there. So between the two, I think you'll learn 15 chapters. You'll master the course. Very inexpensive, by the way. On our website, iraepstein.com, under education. Okay. So if that's lost, I wouldn't want to be long. But until it's lost, pullbacks in the market, to me, are still entry spots. In the Dow, overbought market. Now, it's interesting because the Dow is one of these markets that has a strong seasonal. 14 out of the past 15 years, I believe that's it. In fact, maybe this is the one that's 15 out of 15 years, has gone up in the month of July. NASDAQ is right behind it with 14 or 15, same way. But this is embedded. I like this a lot better than the Dow. Therefore, in pullbacks, until you get the red line, closing under 79, it's at 93. No, I think the pros, there's a way that they'll come in and buy the market. I teach that methodology in the course. You already had the bullish crossover. So if you and I take a look and step back here, where did that occur? Watch. This was the high of the market prior to the occurrence. Here's the market coming up for that high. So I still think there's room left in this market, is what I'm saying. In the Russell, you went up to the upper Bollinger Band. What do you do when you're overbought? That's where you're at, and you hit the band. I think the pros come out of the market. So unlike the other S&P, unlike the S&P or the NASDAQ, I think that this is the one the traders come out of. Then we get to the bonds and the notes. And where you fell is, first off, you have been in sideways action. I said as we got into it, I thought you'd fail at the top side, and I'm going to repeat, I think you'll fail at the downside. You have to prove to me you can get under it and stay under it. You do have the first week under it, closing at the bottom of a range. If you get another week like that, it converts itself. Then I say you have broken out the downside. You have downside breakouts until you get back through these highs. The odds favor another leg to the downside. Got to wait and see if that happens. You're only going to come into Sunday night trade. In the dollar index, you're about as neutral as you can be. You keep hanging here. Now, I happen to think the dollar wants to turn bearish. I say that because I think they're going to lose in the dollar. The Fed keep raising rates. I'm wide open now to the idea of one more rate cut, and then you got to prove that you can keep it. But if you keep dropping all the numbers the way you have, the Fed will pull back and take a look. They won't say they're going to pivot down. They'll say they'll keep looking, and if they got to come in, they'll have the threat of that over the market. But the marketplace will start anticipating things. So I believe that the dollar is at that wobble area where it can begin to top out. and at the same time start to move back up in the eurocurrency. You'll be back in an uptrend if you take out the high I'm pointing to here, so you want to pay close attention to that. In the Canadian dollar, you've got the market that went up, was riding the band, fell back, and it's overbought. I don't see anything fresh to be done there. In the Japanese yen, I would call this a nice relief rally we're getting, but not anything out of the woods. Number one, you're fully embedded. Number two, a nice rally, yes, 0.45% up for the week. I think you get now higher, and I think the pros will step in on a weekly basis, just off my embedded course, the enhanced Bollinger Band course, and sell this market again. So I'm looking for that to show up this week. In Bitcoin, I see a market that's overbought with distribution, lots of resistance from 32,500 to 32,644. In the Brent, you can see the battle. It's right on the 18-week average. If you can clear these highs and get a higher close away from them, I think then the market is saying, okay, the Saudis have something going with OPEC+. You got to prove to me you can do it. Hasn't done it yet. When I look at the weekly bar chart, higher lows, higher highs, and you closed over that. I think the market's turned itself to the upside until you take out last week's low with the potential for wherever the Bollinger Band is to be an upside target. I see the same thing in WTI with the stop under, not this past week, the week before's low, looking to see if it can get up into this area. In Rebob gasoline, I'm a broken record. I said I don't think it's ready to go, but I did think that distillates were ready to go, and away they went. So again, I think take a look, learn. This enhanced Bollinger Band course will open your eyes up to this study, and you will see the high probability when you hit these Bollinger Bands. Take a look. Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time. And on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.